So you are seeing my YouTube channel Learn Accounting with Sir Haris, and this question is basically has come in October, November 24, 31, and that is from profit and loss sharing arrangements. Profit and loss sharing arrangement is the topic, where we have a partnership changes, where there is an admission, retirement, and you have to calculate 6 months profit separately. You have to prepare a preparation account separately for 6 months and 6 months next for the last 6 months separately. So let's see this question. October number 24, 31. Question number 1 is the paper, and profit and loss sharing arrangement A2 accounting we are studying. Topic is partnership changes, and in partnership changes we are solving October, November 24, 31. Question number 1 regarding profit and loss sharing arrangement. Angie and Harry have been in partnership for some years. They maintain both current and capital account. Their financial year end is 31st December. Their partnership agreement stated that they share profit and loss equally. Angie had a partner's salary of 10,000 per annum, and interest on capital was calculated at 10% per annum. Matlab, Angie is also taking a partnership salary of 10,000, and interest on capital for both the partners is going to be 10%. But definitely on 1st July, after 6 months, there is going to be a partnership change. The partnership agreement was changed. The profit sharing ratio between Angie and Harry become 3:1. It was equal in the past, but now it is 3/4 and 1/4. Angie's salary and the rate of interest on capital was unchanged. It means that salary is still 10,000, 5,000 for the previous 6 months and the 5,000 for the last 6 months. Interest on capital is still at the rate of same percent, at the rate of 10%, unchanged. But Harry was to receive a salary of 12,000 per annum. So now, in the last 6 months, Harry is also going to receive salary of 12,000 per annum. The following information was available. Balance at 1st January per capital account. Angie and Harry is given. Premises at cost 90,000. Provision for depreciation of premises 9,000. Other non-current assets at cost 16,000. The value of premises is split into 50% land and 50% building. Why, sir? Because we know that premises land will not depreciate. So it means out of 90,000, 45,000 is going to be the land which will not depreciate, and 45,000 is going to be the building. So 45,000 building is already depreciated by 9,000, right? Already depreciated by 9,000. So maybe it has been depreciated by 20% for 1 year, or even more than 1 year. Let's see. The building are being depreciated at the rate of 4% per annum using the straight line method. Okay. So building is going to be depreciated 4% per annum at the rate of straight line method. So we can calculate 45,000 is 50% land, and the remaining 50% is the building. So let's calculate the depreciation on building, that is 45,000 into 4%. That is 1,800. So 1,800 is the depreciation using straight line method. And we have been given that 9,000 depreciation has already been done. So we can easily calculate. I'm not solving this with the point of view of this question. I'm solving this with the point of view of the point of depreciation actually, which usually come in the paper again and again. So 45,000 into 4%, because it is straight line method on cost, it becomes 1,800. So because 9,000 depreciation has already been done, it is accumulated depreciation, which is 9,000. So 9,000 divided by 1,800, it means that how many years have passed? 5 years. It means that the building has been depreciated by 5 years with an amount of 1,800 per year. So 1,800, 1,800, 1,800, 1,800, and 1,800 becomes 9,000 is the total depreciation charged till now on the cost of building of 45,000. Next, the other non-current assets are being depreciated in equal installment over a 5-year period. Already we imagine that there is a 5-year period, obviously. So other non-current asset at cost is 16,000, and they are supposed to be depreciated over a 5-year period. So 16,000 divided by 5, what is going to be the amount? That is 3,200. So 3,200 is the depreciation on the other non-current asset. Profit and loss data for the year ended 31st December is calculated. From 1st January to 30th June, revenue is this. And for the last 6 months is this. Cost of sale is given also separately. Wages and salaries are given separately. Other operating expenses are also given separately, excluding depreciation. So depreciation, we have to go for that. partner salaries were included in the wages and salaries figure. So in wages and salaries figure, partner salaries were included in the wages and salaries figure, which is wrong actually. Why it is wrong, sir? Because we know that the partner salary should not be part of the income statement or expenses. No, it is a part of the income statement. That's it should be written. Sorry, it should be written in the profit and loss appropriation account. So it should not be part of the wages and salaries expense. It should be written in the appropriation account. It is an appropriation rather than expense of the business. Okay. So on 30th June, the premises were revalued to 1,50,000. Okay. And the useful life of was reassessed. And depreciation continues to be calculated at the same rate. So now what happened? On 30th June 2023, this is 1st January 2023, after 6 months, it means that the depreciation has been reassessed. So for the first 6 months, if you just calculate that for the first 6 months, depreciation on the building will remain the same, which is 45,000 into 4%, 1,800 into 6/12, right? So that will be 6/12. So that will become how much? 900 for the first 6 months. But in the later part of the 6 months, he said that the useful life was, the premises was revalued to 1,50,000 and the useful life was reassessed. So useful life is going to be reassessed again. And depreciation continues to be calculated at the same rate. Depreciation is still at the same rate. So let's calculate it. If you just see that 4% is the depreciation rate, means 4/100. 4/100 means beta 1/25. So it means that the depreciation useful life of the building or the premises, it was 25 years. But now, out of these 25 years, 5 years have already been done. So we are not supposed to calculate depreciation on 5.5 years, you can say. Now the depreciation is going to be reassessed. So 5 years have passed. Remaining life is going to be 20 years. Okay. But for the 20 years, the 6 months depreciation is going to be calculated in the same manner, which is 45,000 into 4% into 6/12, that is 900. And for the remaining 6 months, the value of the building premises is going to be 1,50,000. But we should remember that out of 1,50,000, how much it is going to be? How much it is going to be the land? Light chali. Okay, so 90,000 is going to become 1,50,000, right? Okay. So 1,50,000 is now the premises value. And out of that, we know the land has a cost of 90,000. Out of 45,000 is the land cost, right? So land cost is going to be, because 50% is the cost of the land and 50% cost belongs to the building, and the cost was 90,000. So that's why we have separated. So minus 45,000, or you can see that is going to be how much? 1,05,000. So now 45,000 of the building value has been revalued, increased by 60,000, and it has become 1,05,000. And now the depreciation on this divided by 20 into 6/12. That is going to be the depreciation for the last 6 months. Why, sir? Because out of 25 years, 20 years, 5 years have already been passed. And for the remaining life is going to be the 20 years. And 6 months depreciation is already calculated at the rate of 4% according to 25 years actually, right? Into 6/12. And the remaining we will calculate according to the 20 years, which is into 6/12. And then the remaining life will become, so 1,05,000 divided by 20 into 6/12. So that is 2,625. So the depreciation for the next 6 months for building is going to be 2,625 rather than 900, because the building or the premises has been revalued to 1,50,000 other than land, and the useful life was reassessed. and depreciation continues to be calculated at the same rate. So according to that rate, 4%, the life of the building is 25 years, and 5 years have passed, so remaining life was 20 years. So this is how we are done with this calculation. Next is the goodwill on 1st July was 30,000, although it was not to be written in the books of account. So we are not supposed to, goodwill should not be recorded in the books of account. Oh, sorry. So now let's talk about the question. We'll move toward the October, November 21. What is the first part? Calculate the profit for the period for both 6 months ending 30th June and the 6 months ending 31st December. So let's calculate it. I will write here up to 30th June, and here I will write up to 31st December. So I will start with the sales, with the revenue, less cost of sales. So let's see what is the revenue for the period are given. Revenue for the both periods are given separately. We can calculate it easily. That is given 106600 and 119,000. I will write here 106600 and here 119,000, 119,000. Less cost of sales, it is also given in the question, that is 61,700 and 63,790. So 61,700 and 63,790. Right here 63,790. Okay. Now let's calculate the gross profit. Can you please help me out? What is the gross profit for the both periods? That is going to be 106600 minus 61,700. That is 44,900. I will write here. And for next, that is 119,000 minus 63,790. That is 55,210. So I will write here, that is 55,210. Now I will subtract less expenses or operating expenses, whatever you want to write it. And operating expenses includes, first of all, salaries and wages. So if we talk about salaries and wages, you should remember this, that in salaries and wages, we have wrongly added 19,700. Partner salaries were included. So in the first 6 months, we have to pay salary only to one of the partner, and who is Angie. Angie is 10,000. So it means that the first 6 months, we have recorded 5,000 more. So 19,700 minus 5,000 for the expenses, we will be having 14,700. So wages and salaries, the correct figure is going to be 14,700. Why, sir? Because the Angie salary is 10,000, so 50% should be recorded in the first 6 months. 5,000 we have wrongly added in the wages and salaries. So we will subtract 5,000. So 14,700 is the answer. Next is 27,320. And here 27,320, and we have wrongly added minus 5,000 and minus 6,000 because Angie and both partner salaries has been included wrongly, but 50%, because he said clearly, he has informed us clearly that partner agreement, now Harry is also going to receive a salary of 12,000 where Angie will continue. So it means that 5,000 and 11,000 both are added wrongly. So 27,320 minus 11,000, that is 16,320 is the amount of salaries and wages. So I will write here 16,320. Yeah. Okay. Next is going to be the depreciation. So let me write depreciation on premises and then depreciation on other non-current assets. Let's see if there is some other expenses given in the question. I'll check it out. wages and salaries, other operating costs. Okay, I have to write that also. Other operating costs, that is excluding depreciation, 22,100 and 232,000. So let me write that first. Other operating cost. Now you can write depreciation after adding other operating other operating costs also. 22,100, 23,200. So I will write separately actually. 22,100 and 23,200. Now let's talk about depreciation on the premises. So depreciation on premises for the first 6 months is going to be 900. Why, sir? Because that is going to be 45,000. I will calculate again for you just to make you understand. That is going to be 45,000 into 4% into 6/12. Because 50% is the land and 50% is going to be the building. But for the next 6 months, the depreciation should be charged not according to 4%, 4 by 100, not according to 25 years, because 5 years has already been passed. How come? 9,000 divided by 18, so 5 years have passed. So now the remaining life is 20 years. So the premises has been revalued to 1,50,000. Out of that, land was 45,000. So 1,05,000 is the amount of building divided by 20 into 6/12. So 2,625 is going to be the depreciation for the later part. So I will write here 2,625 for the last 6 months. मैं थोड़ा गलत लिख दिया, अदर नॉन करंट एसेट्स की जगह पे मैं ऊपर लिखता हूँ 900 and 2,625. I hope you are getting the point. Yes, it is a difficult question, no doubt it is a difficult question. But if you are able to attempt the question, maybe 75-80%, you will be able to get a very healthy marks in that. Okay. Now the depreciation on other non-current assets, if we see, that is over a period of 5 years. And the other non-current asset cost is 16,000. So that will become 16,000 divided by 5. I have calculated here 3,200. And it is going to be distributed between the two periods, 50% over here. That is going to be 1,600. And 50% I will write here, that is going to be 1,600. And the total is going to be again, obviously 3,200. So now from the gross profit, I will subtract the expenses to find the profit for the year. So let's calculate that so that I can find the profit for the year. And then I will go for the appropriation account, and might be current account can also be prepared through appropriation account. So let's calculate that 44,900 minus 14,700 minus 900 minus 1,600 and minus 22,100. That is 5,600 is going to be the profit. For the first 6 months, 5,600 is going to be the profit. For the later 6 months, the gross profit is 55,210 minus 16,320, which is the salaries and wages, minus 2,625, the depreciation, minus 1,600, the depreciation on other non-current asset, and 23,200 is going to be the operating cost. So the answer is 11,145. This profit is going to be 11,145 for this part of the for this part of the period. So see, if there is any problem, you can ask me. Till here, we have done with the question, right? And we have taken out all the adjustments also. So let's see that what other parts have been asked by us by the examiner. So calculate the profit for the year for both 6 months ending. We are done with that. 8 mark question is there. Then prepare the appropriation account for both 6 months ending. That is 13 marks have been given. And calculate in 2 decimal places the profit margin of the partnership for the 6 months ending 31st December. Okay, so let's prepare the appropriation account. He could have asked us to prepare to calculate the goodwill also, and that is also a major, it also plays a major part in the question. I will show you. So let's, I'm going to wrap it up. I'm going to wrap it up now. All these things which have been written by me, and I'm going to prepare the appropriation account. So let's see profit and loss appropriation account. You can write here if you want to. This is basically the statement of profit and loss I have prepared. Although he didn't demand us to prepare the statement of profit and loss, he just wanted us to go for the calculation, but it is a better thing that we should go for the whole way, the whole process or procedure to be adopted. So here also I will write two columns, and here I'm going to write the profit for the period. The profit for the first period is going to be 5,600, and profit for the later part of the year is going to be 11,465. Yes, you can write up to 6 months, the same thing, up to 30th June and up to 31st December. Let me write it down for you so that will become more helpful. Here, up to 30th June, and here I am going to write up to 31st December, and here, okay, so let's move on to the next part. So that is going to be appropriation account. So profit for the year is 5,600, and up to 31st December, it is going to be 11,465. So first of all, what we do, we add interest on drawing, but in this question, there is no interest on drawing, so we is going to less partnership salary. So that's partnership salaries. So that is going to be, if you talk about here, it is going to be only one partner salary. We have been given only one partner salary. And let me check it out. That what is the amount of the partner salary? That is going to be 5,000. That is rates with Angie. I will write Angie here. I will write A, and the salary is going to be 5,000. 10,000 minus 5,000 will be the answer. And for here, both partner salary will be charged. 5,000 for the first part of the 6 months. That is 5,000, and for the second part, it is 6,000. Why, sir? Because we need to subtract the salary of Angie and Harry both. So 12,000 salary of Harry should be divided by 2. So that is going to be 11,000 in total. We have already discussed that many times, that out of 10,000 of Angie salary, we will record 50%, and out of Harry, Angie will still get in the later 6 months, and he will get that. So the answer is going to be 600. And over here, 11,465 minus 11,465 is going to be the profit. Now I have to subtract less interest on capital for both partners. Interest on capital is going to be subtracted now for A and for H. That is going to be remain the same. He said that interest on capital percentage is 10%. Let me show you. The percentage of interest on capital is going to be how much? That is where it is 10% per annum. Was calculated at 10% per annum, and the rate of interest on capital was unchanged. Means first 6 months 10%, second 6 months 10%. But the capital account is 50,000 and 30,000 currently. So I will calculate for this 50,000 into 10% into 6/12, and 30,000 into 10% for half year into 6/12. So that will become, for this, it will become 50,000 into 10%, that 5,000, and 6/12 is 2,500, and for this 30,000 into 10%, 3,000, and that is going to be 1,500. So the total is going to be how much? That is 4,000. So there is going to be a loss should be supposed to be shared of 3,400 between the two partners, and that is supposed to be shared equally. Loss will be shared equally between A and H, because the first ratio between the first 6 months ratio is basically equal between them. So that is going to be 1,700 and 1,700, and that is going to be the loss which is shared between the two partners. Now, for the next part, the capital account will change. Percentage will remain the same, 10% to 6/12, but the balance of the capital account will change. Why? Because of the goodwill. If you just look at the question, we have been given goodwill also, that is 30,000. So goodwill we have to prepare. Let's prepare the capital accounts. Let's prepare the capital account for A and H. First of all, this calculation you can do. For brought down, we have 50,000 and 30,000. Right? Then 50,000 and 30,000 are given. And then there is goodwill supposed to be credited first equally. And what is the amount of goodwill? If you just look at the question, the amount of goodwill is 30,000. So it will be distributed equally between the partners. That is 15,000 and 15,000. And now, again, on the debit side, goodwill will be written off with old new ratio. That is 3 by 4. So 30,000 into 3 by 4. How much it is going to be? 30,000 into 3 by 4. Yeah. 30,000 into 3 by 4. 24,750. And 30,000 into 1 by 4. 70. 75. Now I can go for the total of this. I will subtract the debit side and find the carried down balances. So why we are doing that? Because the last 6 months interest on capital is supposed to be calculated on these balances. We have to calculate last figures on these balances. So please go for the total of the credit side. That is 65,000 and this is 45,000. So please subtract 65,000 minus 24750. How much? 4250. 40,250. And for this, 45,000 minus 7,500. That is 37,500. Now the interest on capital for the last 6 months is supposed to be calculated on this percentage, on this capital amount. Right? That is the problem. So we'll calculate for the last 6 months 40250 into 10% into 6 over 12. How much it will come? 2012.5. Okay. 2012.5. And for this 37,000 into 37,500, sorry, into 10% and into 6 over 12. 1875. You can total them up. How much it is going to be? Many 0.3887.5. So what is the loss now? Because this will also come into a loss. So what is the loss? We have a loss actually. No, 465 minus 3667 or 3887. Please do it again. Two 2012.5 plus 1875. Okay, 3887.5 minus 465. ये loss आ गया आपका 3422.5 is the loss. Now this loss is supposed to be distributed between NG and H in the ratio of 3 by 4 and 1 by 4. And that is the new ratio. So 3422.5 into 3 by 4. 3 by 4. It's 6.875. And the next is 1 by 4. Eight five five point six two five, and the total will again 3422.5 is the total. So we have to calculate interest on capital at the capital at the start of the year, which is 50,000 and 30,000. That's fine, 50,000 and 30,000, but that is for the first 6 months. For the last 6 months, we have to calculate interest on capital at the same rate, but the capital amount will be changed because of the goodwill. Because goodwill is supposed to be credited with the old ratio equally and then debited with the new ratio, which is 3:1, 3 by 4 and 1 by 4. And the interest on capital will be calculated on the new capital amounts, which are which are the capitals at 30th June or 1st July 2023, whatever. Right? So this is how we are done with this question. Difficult question, obviously, but this is how he's asking. And we can find such type of question in the exam also. So preparation account we have prepared, 13 marks are there. Calculate to two decimal places the profit margin of the period for the 6 months ended 31st December. That is quite easy actually. Why? Because the profit is 11465 right here. 11465 divided by sales is 119000 multiplied by 100. That is the profit margin. 9.63%. That is the answer. Yeah. Yes. Okay. Harry is also a shareholder in a large company in a different industry. When he looked at the financial statement of the company, found that it had a higher profit margin than the partnership. He also saw that it had a qualified audit report. Discuss whether Harry should be comparing the profit margin of the company with that of the partnership. Right? So there is no comparison because the qualified audit report means that there is a misstatement, material misstatement in the financial statement of the company. So it might not be showing the true and fair view of the business, and the profit disclosure is not accurate. So that's why you should not rely on the profit margin of the company that is higher than the partnership. So there is no reason to rely on that, right? So that's it for today. Thank you very much.